Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 2nd, 2022. For those of you tuning in for the first time, here's our background, ways to find more about us, services we offer. These are the things that we trade. These are how we trade. We use structured risk and reward. We have statistically significant checkpoints on the pathway down and up. We use statistics to generate targets on the basis of trade location and relative volatility. We set structured price targets so we can monitor the performance of the trade. We have routines that allow us to start the day and then trade through a series of contingencies and follow price in a sensible way. We look to align ourselves, our systems, and our markets, and we use the regression line crossover system as a sense-making framework to give us a structured, fractal, sense-making framework in every time frame. That's what we do. All right, so let's start with the sniper trade of the day. We're looking at old reliable Cliffs Natural Resources, a steel company. 3-minute charts. Here was yesterday's close. Here was the gap down. Significant. This is our standard minimum manageable risk box. That's the R10, which, as you know, is 1/10 of a range stat, which is our maximum reasonable intraday move. So there are essentially 10 of those available in either direction, depending on where price wants to go. So we don't have to justify that there is a reasonable move ahead of us. So the OR3 is indicated by the blue square. It opened here, sold off, moved to this level, closed. It opened here, sold off, and then when it resumed, we bought the standard opening at the breakout above the OR3, the opening range 3-minute. We established our standard risk box, and we're looking to see it go. Now, we notice that the peak of the RL10, which is this blue line, is here. So we need to see price get above that level in order for it to be interesting, which makes this space between our entry and that interesting space. That's the tactical space. And all we need to do in the tactical space is to have an opportunity to move our stop above our entry in order to lock in a no-lose plus dinner for two, meaning that we're going to make $100 out of that trade. If it goes up and then sells off and hits our stop, that little wedge is going to equal $100 for us. And that's what a dinner for two costs in Kansas. If it gets beyond this limit, now it becomes an interesting trade and might really be a mover. That's our standard work. This one moves briefly above that level and then sells off quickly. I take about a minus 0.7 loss. It then stabilizes, and now I'm just monitoring. It moves out again. It makes a support level here where the R10 holds. The PSAR flips in this region. When it breaks the PSAR here, which is equal to the peak of the R10, I just buy it again. I put my standard risk box on it again. We just re-enter like we're supposed to. Check or hold. This one gives us a nice move. When it holds above the dragon, oops, stop is here. I'm ready to go ahead and move this up into space. We've locked in 0.2. You say, hey, Ken, when I notice this gain and then it starts selling, would I be wrong to take a gain there? No, that would be a +1. You would more than pay for this one. There's nothing wrong with that. Depends what you want. In fact, if any of these little retracements get you out, this break here should get you back in. I did not exit because the R10 never penetrated my PSAR. Now, price teased it a couple times, but the R10 is the true price. This is just the train trying to get momentum and going. It's generally up. The PSAR is consistently showing up. So there we are. Now that we've cleared this congestion, which is all well above that peak from yesterday, and now we've got about 2R in hand with some momentum. I'm content with having my stop somewhere up in here. Now that I'm noticing this price move in there, I like to bring it up in here in order to lock in. No lose on the second position. It makes an orderly exit. In this space is where the R10 penetrates the PSAR. So we get about a 1, 2, 3, 4 on the first entry, 2 on the second entry, so that's about +6. Call that -1. So we're about at net +5 on the morning so far. I felt, again, I have been interested in the long side on the steels, so I'd notice that, was there a potential short here with the PSAR flip? Yes, you would not lose money on that short. Notice that the PSAR holds all the way down, and although price teased it a few times, the R10 never flinched. That's an important distinction. But now we get this pattern. Higher lows. What would we call that entry? A COTA 2 with a standard risk box. If it gets above this peak of the R10, that's where it's going to get interesting. So again, this is the tactical space in here. All I have to do is get my risk above my entry in order to lock in a wedge. No lose plus dinner for 2. That's all I'm trying to do in this tactical space is get the minimum wedge in place. It improves my psychology. After a bit of a slow start, it gets going. Gives me a standard orderly exit when the R10 rolls over, crosses the baby dragon, enters the dragon, hits the PSAR, You get an extra +1, so now we're about +6. And there we are for the day. Cliff Natural Resources, standard work. Here's what the S&P looked like today on the 30-minute chart. So this is the daily move right here. This is the thin slice. That's today. This is our 5-day look back. There's the 5-day high, the 5-day low. Here's the 10-day look back. The 5-day range is almost the same as the 10-day range, so this is relatively large 5-day volatility, and most of that is in this sharp move here. And it held pretty well, so this week on net is up, and it's pushing above the 30-day high. There's the 150-day high up at 430. So that's pretty key. We like that. This thing has been trying hard. Here's the 30-day look back. Now using daily charts. Here's today. Gap down, it closed well. There's our 5-day range. Here's our 10-day look back. There's our 10-day range. Here's our 30-day look back. There's our 30-day low. And today was a 30-day high. Nothing wrong with that. PSAR is strong. If that were to break, then the downside target would be here at 376-ish at the belly of the dragon and the RL10. Next target to the upside really is 430, which is the 150-day high. That would be a really strong move and quite a recovery. Here's our 150-day look back. Daily bars. We're about 15.5% off the all-time high. This is where we closed. Again, here's our 10-day, 30-day, 60, 90, 120, 150. There's our 150-day high. There's our 150-day low. And that rebound off the double bottom, you can now see we've got leg 1, leg 2, and the beginnings of leg 3 starting. So getting to here, 412, 420, 430, those are within range next week. For me, if the support shelf right there at about 400 breaks, I'm treating the bottom of the RL10s as key. This to me is the discretionary zone. If it breaks below 400, that will feel like a psychological failure, and then I would see price to 376 is in range. And if that breaks, that's the PSAR flip. Look out below 30-day low, and then all the way back to 350. Feels like we're through the rough water, though, and the January effect is coming. Just speaking of some seasonalities here. We haven't looked at this for a while. When we look at the MACD, here's the two monthly MACDs that we care about, monthly spring and monthly summer. Nothing is in that yet. They're still all in the winter, mostly, I would say. We look at weekly springs and weekly summer. The only symbol that's in a weekly summer, interestingly, is the FANGs. Those large cap Uber tech companies are really doing well, and they are on a daily summer. You've got a number of other symbols that are on weekly spring, which is pretty good. That's early in a turnaround. And then these that are on a daily summer are especially well postured lately. Microsoft, Treasuries, Staples, S&P discretionary, the Aussie dollar, Brazil and Tesla, not too bad either. They're emerging. Now, these others that are in daily fall have had a nice run up, but have pulled back a little bit. So what you have is essentially a pattern that looks like weekly spring. That's this. But then a daily fall means that they've had a nice run up in the summer through the zero line and are decaying a little bit. But if we see a resumption, that's going to be like a Kata 2. And then these are all really well postured to do well. This would be my short list of buying on the dip. These that are in the daily summer are the ones that are currently leading the way. And if you look at treasuries, oddly enough, it is an extraordinarily strong pattern. All right, let's look at the sectors today. Here's the S&P, down a fraction at minus 0.12. Diamonds were better at plus 0.1. Emerging markets 0.38. Russell 0.58. The strongest sector, treasuries 1.26, closing at 107, and that's up from 91. That's a 22% gain in treasuries off their swing low, which is pretty darn amazing. The Qs were the laggards today at minus 0.4. Tesla was basically flat, right even with the market at 0.08. But interestingly, it was better than the NASDAQ. Okay. Let's take a look at the underperformers today. For reference, again, the S&P minus 0.12. So we had discretionary, Aussie dollar, agriculture, residential real estate to minus 0.3. The next big cluster, wood, finance, tech, oil exploration, oil, blended commodities, and wheat and precious metals, down from minus 0.4 down to minus 1.17. Mexico, worst sector at minus 1.9. Individual companies that suffered, PayPal off 5%, VIX off 1.7. Here's a couple semis. So we've got Intel and NVIDIA down 1.4 and 1.5. The best performing semi was Texas Instruments, basically flat. Squarespace minus 1.4. Rivian and Apple off a third. So actually not a painful selling day. This was a market that was content to hold positions over the weekend is how it feels. All right, to the upside. Again, here's the S&P and Tesla. So you've got lumber at 0.2, commercial real estate, Brazil and uranium up to 0.33, staples 0.5, ARC Innovation and Genomics, the FANGs, Bitcoin and materials 1.1, lithium and Ethereum 1.5, clean energy 2.6, biotechs 3%, marijuana another strong day 3.61. The best performers, Coinbase. Here's our metals today. Couldn't go wrong with them. That's why we trade them. Cliff was up 3.5%, Alcoa 2.6%, U.S. Steel 2%, Robinhood not bad, Devon Energy 0.26%, Microsoft slightly better than the market. The metals. That's why we trade them. All right, let's take a look at the traders today. See how they did. Here's Constantine, our prop trader. He's doing the DAX 30 on 2 minutes. There's his PSAR flip. Breaks a support level. He's short. He sees the big harsh sell-off and decides 5R is enough. That's 5R in about 30 minutes. Nice. Here's Agnieszka. All right, she's working. Let's see. Is this the Canadian dollar and Japan? Basically flat for the day. This little gyration and breakout, I guess I like that. I like the quick scratch. She tried the channel break short, quick scratch, second entry, quick scratch, stays with it a little bit longer this time. You could maybe have gotten this at the PSAR flip. That's a nice exit, but I'm not sure why we recovered unless it was really just to get back the whole enterprise to about flat because there was another almost an R inside there. Here's the pound Canadian dollar on the 5 minute. She notices here's the PSAR flip and a VWAP break, doesn't get it, misses the about 2R there. Takes a half an hour loss, scratch, stays with it and picks up 2. Could have stayed longer. That's not really an exit sign. And there's another 2R there, and if you add a position at the 2R battle drill, you not only pick up 2, but you pick up another 2 because you've got a second position. So that could have been 6. -1 could have been 5 for the day on that one. So the pound Canada looks like an interesting pair. Nolan with Tesla. 1.5 for the day. This is like a 1-2 entry. It crosses back above the PSAR after a short sell-off. He gets paid a little bit. The short was there. Didn't take it. The reversal was there on a 1-2-3 entry right about here. Didn't take it. Waits for the PSAR flip. Gets paid. I love that exit. I love that short because you're hitting it as it's crossing the VWAP. That little exit gets you paid, but if you're going to be that quick on the trigger, then yes, as you know, you got to get short again, and then you won't lose money. You might even make a little bit. As it was, this feels like a bit of a chase, although I like it because it's right after an R10 wiggle. That's fine. And then I love this reversal. So your total of 1.5 for the day is pretty darn good. Like that. NVIDIA, there's an awful lot of activity around in here that I'm not seeing. There's like 3 or 4 trades in there. I see maybe 1. Here's your OR3. When this rolls over, I don't mind you taking this, but I think you could take that short here in the OR3 break, and you get paid. That's a good scratch. This is a breakout above the PSAR. -1. You get short here. You get paid a little bit. That looks like a stop and reverse scratch. No, it doesn't. This is short. I like this stop and reverse. So, yeah, you missed the mover in here, as you note, but it's that wasn't painful loss. It was some furious activity. Um, treasuries. Treasuries are smoother than the regular indexes because the market is so large for this. Um, here's a PSAR break. So you got short here, took a 1 hour loss. Now this one, when this one doesn't go, you don't have to take a full 1 hour loss. Although I do like the patience of waiting for this and it breaks the PSAR, gets paid, gets paid. I like that short. I like that exit. Um, I'd like to see you in treasuries respect the PSAR a little more. The treasuries are less volatile actually than the other ones, and you can actually start trading the PSAR more. Um, here's Tesla. Is this Satya? Let's remember to put our names on these. I think it's Satya. 1, 2, 3 entry long, quick loss. That can be a stop and reverse instead of waiting from here. You captured most of that, but that improved entry and being a little stricter here would allow you to be net positive for the day so far. Got paid, couple good 2 or 3 scratches. There wasn't much happening in here. That's pretty good patience. Um, but now what I want you to notice is once we're well into the day, this little combination, a double kata 2, yummy. There's 3R waiting for you, as you know. And then last, here's 2R in Brazil. There's a OR3. The entry could have been here, but he gets it here for a scratch instead of +1. I love this PSAR flip. Good cash. You could get short here instead of here, and then this doesn't lose. PSAR flip is great. This is one of the characteristics of Brazil is the relatively orderly movement as compared to some of our stocks. That's pretty good work right there. All right, let's shift to the reports. All right, so starting with the weekend report first. We are in sideways quiet. Pretty strong set of numbers here going back 90 days. Um, green sideways on price. We're above the 200-day moving average now. The risk Z has given us authority to go higher on the swings. The ETF2 is up to 100% exposure. We've got some new holdings in the blended monthly rebalancing. Strong in the U.S. diamonds, mid caps, and then the Euro Asia blend, interestingly. Silver's been just on a tear. Wheat and precious should be an interesting play in that area. This is just a quick look at our regression lines on the dailies. Um, what I like on this one is that the double bottom gets through the RL270, gets to the far side, holds, and takes off again. So we have almost a kata 2. And now we have cleared this key price level around 402, and 430 is the next thing logically in play. If that fails out of here, coming back to about 380 is where it holds. But for me, as we said earlier, 400 is my tactical. is where I'm going to seal the deal because I want to preserve the qualities of that move, like right underneath here. That's about 395. I should also note the thing that is quietly positive here is the uptick in the RL 90. The 90 is above the 270. The last time the 90 reversed, there was a nice run all the way through here from 400 to 430. So I think there's room for another nice little run up to 430. And I also want you to notice that the 270, for the first time in a long time, has basically gotten flat. So this long national nightmare right there was where if it was going to fail, it was supposed to fail. It didn't, and that's enough to turn that thing sideways. That's the first turning point we've seen in almost a year in the RL 270. And you can't ignore the signs of the changing weather. And if we look at the zero line on here's the end of winter, the spring, that was failure to fail. Summer starts right here. There was a momentary pause in the fall, and we're still well in the summer. So this is actually pretty positive to the upside based on MACD. And we've seen these real quick. We'll look at the blended monthly portfolios. Everything's on a buy signal now, except for the odd real estate. Luis, that was an interesting email you sent me about the fragility in retail real estate. That's troubling a lot of people right now. ETF 22, only consumer discretionary and real estate are in the weak areas. I guess I would just say materials and finance looking fairly good. Europe is on a tear. Asia less Japan is looking pretty good. So this is the internationals catching back up, and there's emerging markets quietly getting it done. Even Latin America is making a bounce. So we're seeing global turnarounds right now. This is what I meant about that tear in silver. Brazil gets added on the ETF 32. That's made a nice move. China's making a big bounce. A lot more room to go on that, too. Uh, Hard to attribute that. Is that secret discussions about terminating the war in Russia and Ukraine? I don't know. Dow 30, where's the strength? Boeing and Merck. That's pretty compelling. Nike has made a terrific turnaround, as has Microsoft, and it's still so far in the hole. There's a lot more room for Microsoft and Apple to go, but you can see Microsoft is the clear winner in the Microsoft Apple stakes. That's where the safer money is. Let's look at the ETF liquidities based on ATR percentage. Energy, China, Brazil and semiconductors, gold miners, biotech, oil exploration. These are the very liquid ETFs, the top 30 ETFs by average daily dollar volume over the last 30 days, and which are sufficiently volatile to do short-term trading because we like to see volatility in our short-term targets. Those are the ones in the top 30 right now. Shift to the daily. Dashboard 1. We've seen all that. The uh, the Dow 30, some big breakouts here. Boeing, Coke, Nike. This is where people are already betting with their money. Procter, all looking pretty good. Only United Health is still a significant distance away in the auto framer from his 10-day high. So we should be rewarding relative strength right now. ETF Tactical, here's a big breakout in silver. Treasuries, quietly getting it done. They still got a long way to go to catch up, but that's a pretty strong statement right there. Materials, metals, and mining, looking good. Auto framer and the squeeze, the normal stats for you. Just one Godzilla in the S&P, LUMN, and Coinbase in our tactical symbol set. They are both stealth Godzillas, just waiting to roar. For your perusal, the S&P 500 one-day big movers. Not large moves today. That was a contented day. People willing to just hold things over the weekend. If my brother will post his 19R trade in Procter, we'd be happy to look at it. Stop hiding your light under a bushel basket, buddy. Start sharing those. In the most volatiles, I'm looking for the ones at 5-day volatility and 1-day volatility, so EL is certainly on that list. The NDX summary gives us a quick and dirty sorting mechanism. Procter, Nike, Coke, Cliff, Boeing. Metals and mining, materials, silver, and treasuries. It's telling you where the strength is. Let's see. Let's take a look at Procter if we can, if the boy wonder will get it loaded up. All right, here he goes with a. This looks like a OR3 down here, and there's his standard risk. At the 2R, he adds a position automatically. It gets through the PSAR flip form. This little R10 reversal, that feels pretty good. And then when it breaks through the dragon, it always feels good. So here's his third position. Automatically 2R gets added here. The dragon is working for him all the way up. So he gets a fourth position in. And then when it finally, the RL10 finally rolls over on the baby dragon, he says, all out. And so you just quietly get 4 positions on. And so this one gets 2, 4, 6, 8, actually 7. So he gets about 7, 5, 3, and 1. So I count about 16. Maybe there's an extra group in there too, but that's pretty good. Yeah, so that's the 2R battle drill to the upside. We normally talk about the 2R battle drill on a trade that is moving towards the 2R threshold, and we see it starting to stall. And for us, the 2R battle drill to preserve is how much to give back. But he has adapted it to a positive move so that when he gets 2R and goes through, he's adding a second position and tightening his stop automatically, and it reduces the cognitive load. So that's between 16 and 9 minute or 16R. This is on a 10-minute chart too. So this is not like racing to glory. This is a pretty deliberate process all the way through. That's plenty of time to be stalking and getting back into your zero state and checking other symbols. So that's what 16 looks like. Well done, brother. All right, that's everything we got for today. We shall see you tomorrow. Story time in the morning. Usual suspects. The weekly swing tomorrow night at 8:30. Go USA. Take care.